and physical real-world assets are distinct from stocks as well as bonds because of their physical substance, while these RWAs include real estate commodities, precious metals, as well as art, and they can be tokenized, verified, as well as exchanged on decentralized protocols. Tokenization is a booming industry that has caught the attention of the U.S. Treasury Department. It follows that tokenized RWA use cases could have a broad reach, even expanding to e-commerce as well as the luxury sector. Joining me this morning to discuss physical real-world assets and the future of e-commerce is Justin Banon, founder of Boson Protocol and Fermium Protocol. Good morning, Justin. Thank you so much for joining me. Well, first and foremost, as we kick off the trading session here in New York, overnight we saw Bitcoin top 100,000 for the first time ever. So first and foremost, what did you make of the key milestone and what's the takeaway here?
Well, I think it's a milestone that is going to signal, I think, sort of a massive bull market. I think the thing we've got to realize since the last bull market is that the ability for normal people and institutions to invest in Bitcoin now is much greater. We've got fire hoses connected to the industry in the form of ETFs. So, this news has kind of gone around the world like wildfire, and I think there are going to be a lot of people contacting their financial advisors next week and allocating percentages of their percentage funds, and likewise with institutions. So I think this is going to feed back, and we're going to see the mother of all bull runs.
And Justin, I do want to ask you about the tokenization of real-world assets. So how do you see this shaping the future of e-commerce, and what are the implications here when it comes to how consumers engage with brands in a digital-first economy?
Sure. Well, we've just talked about this, this huge bull run, and if you look at the current state of luxury, I mean, a recent report highlighted that really the growth in luxury has plateaued for the first time since the Great Recession. So brands are really looking for new markets and new sources of revenue. And along is coming a entirely new crypto-rich Web3 demographic fueled by this new bull run. So Gen Z and Gen Alpha consumers with lots of crypto in their wallets. And I mean, that's the primary driver for brands to want to get back into Web3 and crypto. And what you've got to realize is that still at the moment, the things you can do with crypto in your wallet are pretty limited. You can trade more crypto, dabble in DeFi, buy digital NFTs, but it's pretty limited. And so technologies that enable the bridging between crypto in wallets and the purchase of real world assets, especially physical assets, are super attractive to brands, and expect to see lots of these sort of luxury goods being available in digital form to buy direct from a crypto wallet, but then also blended with physicals and also experiences to create these kind of like, multimodal, digitized assets that are going to really open up new markets and new ways of engagement for brands with these demographics.
Yeah, and it's very interesting in terms of demand for the luxury sector. So building on what you just said, what potential do real-world assets as well as tokenization hold for actually driving innovation and also enhancing value when it comes to luxury?
Well, I mean, there's a couple of examples. I mean, one example is, for very ultra high value assets. Previously, brands would be selling these super high value assets to a very limited number of high net worth individuals worldwide. Now, with the advent of technologies like fractionalization, these items can be fractionalized as tokens and sold to a sort of a much wider range of highly engaged fans. So new modes of ownership is one way. But then also things like tokenizing resale markets. Brands can sit in the center of a market where they will verify, custody, and enable the sort of resale of luxury items, and therefore earning revenues on sort of resales. But we're also seeing Web3 technology being used to bring entire supply chains and industries on chain, and for everything to be kind of digitized from raw materials all the way through the production of the luxury item and then through its natural life. So, I mean, this is a super transformative technology.
And as the industry evolves, what do you think are some standout use cases for the adoption of RWAs as well as tokenization?
So, again, the sort of elimination of intermediaries, which isn't really enabling brands to get closer with their customers and to be able to combine digital, physical, and sort of experiences together into products that really tell the story of the brand and sort of engage deeply. Because the key attributes of these Web3 technologies is that they're programmable. So whereas once upon a time, products would be sold and there'd be a separate method of payment, and then there'd be a separate perhaps loyalty program with sort of with like a loyalty engine with rules, all of that can be now programmed within the same technology, and it really brings to life these new propositions.
And finally, before I let you go, we have about 60 seconds here. So can you explain to us what the computable economy is?
Sure. So I recently wrote an academic paper with the blockchain economist, Professor Jason Potts, and the core thesis is that if you look back since the Stone Age, we've seen this exponential increase in wealth, which has always been driven by complexity. The more transactions and parties that you have in the economy, the more wealth everyone has. And if you look at, for example, computers, the way they transmit and store data is super reliable. And it's deterministic. And as a consequence, you can build really complex applications on top. However, if you look at today's economy, when we go to transmit value, we do this through intermediaries. It's slow, it's costly, it's error prone. And if we want to therefore if we have a contract with someone and things go wrong, in order to get recourse, you've got to go through the courts again, costly, error prone, and non-deterministic, fuzzy. And so the core thesis is that by replacing that underlying substrate of legal contracts and intermediaries with blockchains, we get those same deterministic, reliable properties of a computer. And so this means that the economy can execute like a computer, it can be super reliable. And as a consequence, we get much greater complexity in terms of the applications, the economic applications that can be built on top. And complexity equals wealth. So it really unlocking exponential wealth by supporting greater complexity.
Okay, Justin, well, we will have to leave it there. Thank you so much for joining me, and thank you for weighing in on the evolution of the digital asset landscape.